Hey everyone, thank you so much for making it to the TaskRabbit and Everlance webinar. This webinar is being hosted by Everlance, and we're doing it for TaskRabbit, who are our partners. And really the point of it is just to answer the top questions that we hear from taskers all the time about taxes. How do I do my taxes? How do I save money on taxes? Any question you have. We want to make this really interactive. So in the Zoom app that you're using, you should see a little chat function. If you click that, you can ask any questions that you have to the group. We really see the webinars working best when it's really interactive. So as Knox and I are talking, if anything is not clear, if you have any other question we haven't gotten to, just throw it in there and we'll get to it. And I also want to say that when you guys RSVP'd, you put in some great questions in there. So we're going to get to a lot of those as well. And a lot of those we took and we put into this presentation answering. So Michael Fiddler, thank you so much for asking the first question. And we'll get to that as we start flowing through the webinar. So yeah, first we're gonna show you on the next slide what today's agenda is gonna look like. So it's really simple. We're gonna start with really quick introductions of myself and Knox, and then we're gonna get right into the top tasker questions. And at the end, we're gonna leave a little time to tell you about some great ways to do your taxes and save money while doing it. So some really cool discounts and then some additional resources. So without further ado, we'll start with introductions. So my name is Hako. I'm the head of partnerships at Everlance, focusing on self-employed or 1099 folks. And on the next slide, I'll show you a little bit about Everlance. So Everlance is an automatic mileage and expense tracking app. So if you're a tasker, you know that you're on the road a lot, putting a lot of wear and tear on your car. You can reduce your taxes significantly by tracking those miles and deducting them on your taxes. And it's a pain to do it manually. So Everlance does it automatically for you. And we think we do a pretty good job with it. We have a nice rating for both iPhone and Android. And we're excited to be TaskRabbit's main and only partner for mileage tracking. And on the next slide, I'll show you a little bit more what the app looks like. It just automatically records your trips. And then you can either set rules to say, hey, every time I'm going to this client's house, or every time I'm going somewhere between 9 p.m. and 3 p.m., that's always work. Or you can go in there and swipe all the work trips. So at the end of the year, you have a great report. You send that to your accountant or your tax software, and your taxes go down. So that's really how Everlance works. But we're going to keep sort of the talk about Everlance pretty minimal, so we can really focus on the content. And I'm really honored to have Knox here. He's one of the most knowledgeable people about taxes in the country. So it's a huge treat and a huge privilege to have him here on this call, teaching everyone about this. So I'll let Knox introduce himself.
Hey, thank you, Hako. So as he just alluded, I teach a little bit around the country, mostly other tax professionals, but enjoy doing these kinds of webinars from time to time. And our hope for both Hako and myself, I think I can speak for both of us at this point because we've done a few of these by now, but our hope is that we just provide tremendous value for you today, and that we're able to help you with any sort of tax questions that you have. So having said that, as Hako said earlier, for those that just came in, if you have any questions, throw those into the chat, and we will definitely try to get those handled along the way. My areas of specialization are around the gig economy or the shared economy, also the taxation of cryptocurrency, the taxation of cannabis, and then some other things as well. So I have a few specific specializations that I do, but really a bit of a generalist too. I currently serve on the Legislative Implementation Working Group with the Department of Treasury and the IRS. So that just means that when Congress passes laws, I'm one of the guys, one of like 30 people, so it's not that small of a group, but one of about 30 people that gets together and tries to figure out how are we going to implement these at the federal level? What sorts of regulations do we need to write? How is this going to impact our forms? And how are we going to get all that handled? So happy to be here with you today. Hopefully we will bring this down to your level and make sure that you understand whatever questions you are asking. So glad to be with you. And with that, Hako, I'll turn it back to you for some of the top questions you've been asked.
Awesome. Yeah, so the way this is going to work is I'm going to ask to Knox one of the questions that I've been hearing from you guys. Knox will provide his answer, and then I will sometimes, add in a little bit of how I understand things from a non-tax professional point of view. So I'm not a tax professional. I think of myself as someone that, because of the work that I do helping taskers and independent contractors across the gig economy and across like all sorts of self-employed work, because I'm constantly helping those people work on their taxes and work on their businesses. I sort of understand things from like the customer or like the person point of view. So I'll provide that perspective as well. So cool. So the first question, Knox, that I hear from a lot of taskers is, so what are the main differences between employees and ICs, which is short for independent contractor or self-employed or 1099? They're all the same word.
Yeah, it's a great question. So, as you just alluded to, an independent contractor owns their own business. And so, for all of us who are in the gig economy, this is pretty much 90% the space that we are in. Some of us also have another job. So, we may work a full time job, do this on the side. Some of us do this as our full time role, but we are our own boss when we're in the gig economy. That means we set our own hours, we're our own boss. We decide when we work and when we don't. So those are some differences. If you go to work for somebody as an employer, they're going to tell you, hey, come clock in at X time, right? So in this case, as an independent contractor, it's a little bit different, but the taxes are also a little different. So as an employee, we get a W-2 and we have withholdings along the way, meaning that we're paying our taxes along the way. They're held out of our check and they send them into the IRS all through, and the states, all through the process. The case as an independent contractor is different because there is no employer that is pulling out your taxes for you. And this, by the way, is not just your income tax, but also your Social Security and Medicare, which on the employer side we call FICA, now becomes self-employment tax on the independent contractor side. And so as independent contractors, as self-employed individuals, we have to pay those along the way. We're going to talk more about exactly what that looks like and whether or not you're likely to owe, not owe. How do you kind of calculate some of that? What do you do about that to help better prepare for next year if you haven't prepared well as we move through the webinar? But anything you want to add to that?
No, I think that was perfect, Knox.
Cool.
Awesome. So this question, I was just looking through the list of questions that y'all asked in the RSVP form, and this is everywhere. I see it in all sorts of ways. What can I deduct? What can I write off? What are the top deductions? Like however you want to ask it, this seems to be the top question, like the single top question that people are wondering this time of year. So yeah, without further ado, Knox, for taskers, what are really the top deductions for them?
Yeah, great question. So just to kind of go back to the previous question a little bit, one of the big differences between an employee and an independent contractor, another one, is that as an employee, you cannot deduct your expenses that were not reimbursed. However, you used to be able to, by the way, but you cannot any longer, not after the Tax Cuts and Jobs Act. So not for tax year 2018, 19, 20, or all the way through 2025, we're unable to do that. As an independent contractor, you can still deduct expenses that are related to your business that have not been reimbursed. So what are some great examples? Well, the biggest one of these for taskers is going to be your car expense. You do a lot of driving, you drive around to the various places where you're performing these tasks, and you're also going picking up the stuff. So this is a biggie, all of your car expenses. Now this is going to involve mileage and some other things as well, and we're going to talk more through that. But mileage is the biggie here. So with mileage, we're going to have several things that are included in that. We'll talk about how to calculate that, how to track that, and how to make sure we're maximizing this deduction. But that's a biggie. Another one is your phone. So when you have a job like this or work like this, you cannot really do it without your app, right? That means you've got to have a smartphone. And I don't know about you, but when I buy these, they're pretty expensive. So these are expenses that at least a portion of which we're able to deduct. So we're going to figure out what is our business percentage of our bill. So for example, let's just hypothetically assume that I'm a tasker. I don't happen to be, but let's assume that I'm a tasker and that I'm married. am married. So that's 2 of us in the household. And let's pretend that I have 3 kids, right? So I have 5 people on my phone plan. Well, I cannot deduct my entire phone plan just because I'm a tasker, right? So I am only 1/5 of that, or 20% of that bill. So we know that I'm never going to deduct more than 20%. And then beyond that, I'm just going to calculate my percentage of use for business and my percentage of use for personal. Pretty easy to do. You're going to say, you're going to look at your phone calls, your time, your data, whatever, and say, 90% of this is business. If it's 80% or above, you're going to be able to deduct your entire bill related to you. If it's less than that, then you need to break it down. If it's 50-50, then you're going to take 50% of that 1/5, or let me make that 10%, right? So you're going to sort of figure out the way that that works. But the other thing that a lot of people forget about is, because you are working out of your car so much, and because you have to have your app and access to your app to know how to get to places and do your work, then you need a car mount, and you need a car charger, and you need Bluetooth capability potentially, and these sorts of things. So all of these kinds of things that you are purchasing for your work also are going to be somewhat deductible as well, again, based on a similar breakdown of how much of this was for business, how much of this for personal. So this is a way commonly overlooked deduction, and it can be kind of a big one. So you want to make sure that you're accounting for that. Another one we want to look at, obviously, is your tools and your supplies, right? You're a tasker, you have tools, you have supplies, and you have to buy these things in order to do your work. You cannot perform your duties as a tasker without having tools, without having supplies. And so you're going to want to track those in, and we can deduct those. Many of these are going to be subject to something we call Section 179, which simply means we're going to be able to deduct the entire amount of this expense, in most cases for a tasker, right off the bat. I spend $100 on a new drill, whatever the case, I'm probably going to be able to take $100 off. So it's really important to track these and keep track of those receipts as well. Everlance, by the way, will help you to do that. And I'm sure that Hako will talk more about that kind of as we move forward. But anything else you want to say on this one, Hako?
I just want to ask you a question, Knox, that I've seen from some people. So you mentioned, let's say I buy a drill for $100. Do I put $100 all into my tax deduction for this year, or do I have to break it down over multiple years?
Yeah, so great news. You can actually put that entire $100 in. What he's really asking about is a fancy word called depreciation. Is this a depreciable asset? Meaning, is this an asset that we have to roll out over the next 5 years or over the next 7 years, depending on the type of tool and supply? And the answer to that is that there's this really cool thing called Section 179. It's just the section number of the Internal Revenue Code, so only nerds like me would know that. But the bottom line is that you can expense the entire amount if it's less than $2,500. So if you've got less than $2,500 in an expense, then you're going to be able to deduct that entire amount for that particular tool. And then there's also a maximum amount on the return, but I don't think you're likely to hit that. It's like $250,000. So, for most of you, all of the tools that you buy, you're going to be able to deduct 100% of in the first year. Now, if you end up in a negative situation, meaning that you've spent more than you've made, then we're going to take a different approach. We're going to choose to depreciate it and spread that out over multiple years, because you cannot have your expenses related to Section 179 bring you negative in terms of your income. And so in those scenarios, you're going to want to talk to a tax professional to optimize your taxes, almost certainly. But for most of you, you're going to be able to take that right out and 100% of it come right out. So yeah, great question, Nako.
Awesome, thanks. That's great news. So I guess just to summarize, if the expense is underneath $2,500, then you can put it all into 1 year. So that's pretty cool.
Yep. So, other commonly missed items I just want to briefly touch on. Health insurance, but notice what we put here. You can only deduct it as self-employed health insurance if you do not have the option of getting health insurance another way. In other words, you don't have a spouse that can provide it. You don't have, your main job that can provide it. But if you don't have an option to get health insurance another way, then you may be able to claim a self-employed health insurance deduction as well. and that can be huge as well. Parking, tolls, you're driving around all the time, and depending where you are in the country, many of you are going to be subject to paying for parking or paying for tolls. That is 100% deductible, even above your mileage, and even when you take the standard mileage deduction. And so you definitely want to keep track of that. And again, Everlance can help you with that as well. Roadside assistance. It is imperative that you're able to get around, right? So I think it's justifiable to be able to write off things like AAA or any of the other auto clubs out there that provide that expense, or that provide that service for you. You're able to deduct that off. So in my case, we have USAA insurance, and we actually put roadside assistance on there, but it's broken out on my bill how much is added for roadside assistance. And so I'm able to deduct that amount because it is important that I'm able to drive around related to my work. You may have something similar, or you may have an auto club or something like that you'd be able to deduct. And then, of course, mileage and expense tracking. So Everlance is going to help you a ton with that. And Hako, I'll let you say more about that.
Yeah. So actually what we mean here is that if you're using a mileage and expense tracking app like Everlance, that is deductible, right? Or if you're using QuickBooks, and you're paying for that, or you're using some sort of financial management, software accounting, all that is part of your business. So any sort of software, and we just wanted to highlight mileage and expense tracking because that's what we do, all that's deductible. And then just from a high level, I just want to remind people, most of you are probably familiar with deductions, like why they're valuable, but it's still good to get a refresher of, like, for people who don't know, like, why is the deduction valuable? Is that it's actually going to reduce what your taxable income is. So say you made $50,000, if you can deduct $20,000 from mileage and health insurance and all these things, your taxable income goes from 50,000 all the way to 30,000, right? So you're going to get taxed on a way smaller amount. So that's sort of the high level lay person version of why deductions are really important. Cool.
Awesome.
So yeah, the next question, Knox, is what are the first things that I need to know about filing taxes as a tasker? So now I know about deductions, like now it's time to file. Like, what do I need to know?
Yeah, so I guess I just need to say from the start that for most people in America, taxes are stressful, right? It's not something that we say, oh boy, I get to go do my taxes. Unless you're anticipating a big refund, and then you may say, oh boy, I'm about to get my tax refund back. But for the most part, we don't get excited about going through this process. Now, there are a few of us that are exceptions, but we don't get excited about doing our taxes. And so they're a little bit complex, and that's why. It can be stressful because we want to get it right. Unfortunately, being an independent contractor makes it a little bit more complex. Because you're your own boss, you're considered to own your own business, you have an additional schedule to file, and that's a Schedule C. It's just a business tax form that lets the IRS know, hey, I have my own business. I am operating in the shared economy or in the gig economy. And so you're going to be doing that, and you're going to be filing your tax form. And by the way, I noticed that someone asked the question, hey, what is the SIC code, or what is the NAICS code that I need to use as a tasker? And the answer to that is 812990. Hako, if you could put that in the chat for him. So it's 812990 is the tasker code that would be helpful to you, and that's a great question. Now, someone else said, hey, I'm doing Uber, or I'm doing Lyft, or I'm doing, maybe Uber Eats, or I'm a Dasher, or whatever the case may be. You may have different codes for some of those different roles, which would mean different Schedule Cs that you're going to file. So the code that I just gave you is specific to taskers, but there may be some other codes for others. So just be aware of that, but you can find those easily enough, or certainly ask me and I'll help you to find it. So go ahead.
Yeah, this is another question that I saw a lot. A lot of people were saying, okay, so I hear mileage is really important. Where do I put it? How do I actually deduct it on my taxes?
Yeah, so it's going to go actually on the Schedule C. So, if you do a printout of a Schedule C, which few of you are going to file these things out by paper, right? Let's be honest. You're going to use a tax professional, or you're going to use tax software. Almost nobody still fills these things out by hand. It's less than 8% of the U.S. population now. But if you were filling it out by hand, you would notice that there's a front and a back to the Schedule C. And this part is on the back. It's part 4 of the Schedule C. And there are a few questions that we ask here. And I want to cover for a minute that top question that you see there, question 43. When did you place your vehicle in service for business purposes? Because I've noticed through the years that this question really confuses people and they're not sure how to answer it. The short answer is that it's specific to the vehicle that you are deducting here. So for example, if I bought a vehicle July 1st of 2019, but I started in this business, I started doing tasks back in March, well then I probably used two different vehicles, right? Because I would have used one from March through the end of June, and I would have used one for July moving forward. So I'm actually gonna have two different Part 4s that I'm filling out. You have to do one of these for each vehicle. And the date when you placed it in service for business purpose is the date that you started with that particular vehicle. Now, if you have been doing this for multiple years, then you're going to go back to when was the first date that you used that particular vehicle or that particular car or truck for business purposes. So, for example, I started in 2018, say, then I'm going to put July 1st, 2018, or whatever the date is. You don't go back to 1/1 of the current year. You go back to whatever date you first placed that particular vehicle in service. And then we have to make sure that we're accounting for the business miles. And you really want to also track your personal miles because there are some cases in which you need to be able to calculate that percentage. We'll talk more about that in a minute. And then there's some other questions here that I think are fairly self-explanatory. Although let me just tell you that 47A and B is super, super important. When it says, do you have evidence to support your deduction? The last thing you want to do is to have to check no. This is a, hey, IRS, please come audit me, all right? You do not want to check no on that, and you want to have written evidence. How do you get written evidence? Everlance is going to help you with that, and so that's great news. Anything you want to add to that, Paco?
I think I just want to say that even when you say, I do have evidence, mileage, because it's so valuable, it's still one of the top areas that IRS officers will inspect and will ask you for when they're auditing you, right? They know that it's a really easy thing to say, oh yeah, I did 10,000 miles, so please lower my taxes, by $5,000. So that's one of the top places. So that's why it's so important to really have that documentation. And they're pretty good at telling whether you created it, after the fact when you were getting audited, or you actually tracked it throughout the year. So yeah.
Cool.
And I also just want to shout out to some great questions that we're getting. So Michael is asking about motorcycles. How do I, can I write off my motorcycle if that's what I'm using? So Knox, I believe there's a separate mileage rate for motorcycles. Is that right?
Yes, but the short answer is yes, you can.
Cool. Yeah, so you're gonna get less than what you would get for a car because it's cheaper, but you can absolutely do it. And yeah, maybe we'll talk more, or you can look that up.
Cool.
Awesome. I see. Actually, I just want to point out, if you're asking any questions in private, can you please send them out to the whole group? Because then it'll be easier to answer them. That way I don't have to manage all these different private chats. Cool. So yeah, so now we're getting to one of my favorite parts, and I know from looking at the questions that y'all asked, also something that's really on your mind. It's, okay, so how do I actually deduct my car expenses? How do I do my mileage? How do I write off my car? These are all the same question. And there's basically two main options that Knox is going to cover.
Yeah, so as you said, there's two main options. There's one that is very simple, and there's one that is a little more complex. So the simple method, we'll start with that, is the standard mileage method. For most of you, this is also going to work out to give you the best result. And so I recommend it if you can do this one, unless you're driving a super expensive vehicle, which I wouldn't really recommend for a tasker, frankly, then you should be using the standard mileage method. Here's what you have to do for the standard mileage method. You have to keep a log of all of your miles. So in other words, if I am driving my car all year long, then I have to keep track of every time I'm driving that for business use, how many miles was that, and what was the business purpose for that, and what was the date, that sort of thing. So mileage log is important. Now you could do that by paper. You can keep a paper mileage log. It's frankly, when I started in business was what I did. I'm 44 years old. So when I started in business, there were no apps yet, right? It was paper logs. That's what we used. Thankfully, I don't have to do that anymore. And I definitely use apps now. So Everlance does a great job of helping you to do that. One of the things that I noticed that actually surprised us a little bit for my wife and for me is that we actually get more miles that we account for now that we use apps than we did when we were doing it on paper. Why? Because every once in a while we would forget to write down when we did it on paper, right? The great thing about a mileage app is it's automatic. Well, let me rephrase that. They're not all automatic, but Everlance is automatic. And so what that means is it's going to automatically track using GPS and some other technology to make sure that when you are driving, it picks up on that. And then it's going to pop up and it's going to ask you, was this a personal trip or was this a business trip? And it'll also support multiple cars. It'll do all kinds of great stuff that you need. So what you're going to do is you're going to take that mileage at the end of the year, the business mileage, and simply multiply it by the mileage rate. Happens to have been 58 cents for 2019. That was different in 2018, different in 2020. But in 2019, it was 58 cents. So if I drove 100 miles, right? I know all of you did way more than 100 miles. But we're going to keep simple math because I'm tired. So 100 miles times 58 cents, then obviously we have a nice deduction there of $58, right? Pretty simple. That may be a huge, huge benefit for you in terms of what you got paid on the job. You can subtract that expense right off the bat. So I made 75 bucks on this job. I got 58 bucks just in a car expense. I'm able to deduct that, and I'm only paying taxes on my net profit. Okay, so pretty sweet deal. The other option is the actual expense method. Now, in this case, I still have to keep track of all of my miles. I want to emphasize that because a lot of people get confused about this. I still have to keep track all of my miles. But in this case, I also have to track all of my receipts. So I saw a couple of great people, or a couple of great questions from people asking about, well, can I deduct my gas? Can I deduct my insurance? Can I deduct my my repairs? Those sorts of things on my vehicle. And the answer is yes, you can, if you're doing the actual expense method. So in that case, you're going to take a picture of your receipt. It'll store it right in Everlance for you, but you're going to take a picture of all your receipts, and then we'll break down exactly how you do this math. But essentially, we're going to be able to take a percentage of all of those actual expenses that add up, and then we are able to deduct that potentially, or we're able to just do the standard mileage deduction. Standard mileage deduction works out better about 85% of the time. So almost always, unless you're driving a super expensive vehicle, is it going to work out better for you over the long haul, over the life of the time you're using the car. So definitely recommend the standard mileage deduction for most people. Anything else you want to say about that, Hako?
Let's see. I guess I just want to cover like the high level question that a lot of people have is like, hey, I just bought this new Prius that I'm using just for my work, for example. It cost me $20,000. Can I put a $20,000 deduction on my taxes? How would that work?
Yeah, the answer to that is no. But if you're using it exclusively for your business, which is going to be true for almost none of you, by the way, right? Because you're going to do some personal vehicles, some personal things in it. You're dropping your kids off, you're going to church, you're going to the grocery store, you're doing, food in the drive-thru, whatever the case may be, you're probably doing some personal use. But if you're using it exclusively for business, again, true for almost none of you, then you would be able to depreciate it, meaning that over the course of about 7 years, you are able to take the life or a portion of the life of that car at varying rates over the course of 7 years until it is fully depreciated. So, and again, that's going to be a percentage of that depreciable cost, going to be the percentage of business use. So you can do that. However, that $20,000 vehicle over the course of that 7 years would have been better to take the standard mileage method. And we've done that math time and time and time again. So over the long haul, you're going to be better off doing the standard mileage method. There's also a lot less to audit with the standard mileage method because you still have the same log you're auditing, but now you're also adding in all of these other expenses with the actual expense method. By the way, getting some great questions that I just want to hit real quick that are related to this particular topic. Somebody said, hey, if I'm going to my job in a Lyft or an Uber, is that tax deductible? The answer is yes, it is. What is not tax deductible is the mileage, right? So I'm not going to count that car, put it down, and call that my car and put it down for mileage. But the actual expense for my Uber and Lyft, yes, I can absolutely deduct that as transportation expense, and you would be able to do that. Somebody else asked a similar question about a rental car. So what if I rent a car and drive that around? Similar answer. You're going to take the actual expenses in this case, which is going to be the rental expense, the percentage of business use, once again, and then your gas that you add to that. You would be keeping track of those receipts and add that as transportation expense. But you're not allowed to take the standard mileage deduction when you take a rental car or when you take an Uber Lyft, and nobody's asked me, but a train would be the same scenario. Be a little surprised if there were too many taskers using a train, but I suppose it's possible, depending where you are in the country. So same would be true for subways or something like that. So yeah, cannot claim the standard mileage method on those things, but you can claim the actual expense. I hope that helps.
Awesome. Cool. So I think now we're going to dive in a little bit with some more numbers and examples.
Yeah, so here's the standard rate method. We kind of talked about that. Great thing about the standard rate method, no need for the receipts, right? The actual expense method, you're going to keep record of all of these, and then you're going to calculate the percentage of personal use versus business use. We'll show you an example in a minute to kind of break that down. And then we're going to multiply that business percentage by the total amount spent on the car. So to break this down, show you exactly how this works, we're just going to use a real low mileage scenario. Again, this is just an example, but let's say that I drove 3,680 miles for work in 2019. I'm going to multiply that by the standard mileage rate, which again for 2019 was 58 cents. I get a deduction of $2,134.40. So our deductible amount, $2,134.40. Let's compare and contrast that with the actual expense method. So in the actual expense method, in this hypothetical example, total car expenses $1,750. Totally believable for 3,680 miles. That's actually probably high. That's the addition of, I probably have one oil change in there and I've got some gas, right? And so 1,750 is probably actually a little bit high for that. But we're going to say that we drove the 3,680 miles for business. We drove an additional 4,680 for personal. So our total mileage there is 8,360. So maybe we had two oil changes in there. And we are going to figure out our business percentage. How do we do that? We take the business mileage divided by the total mileage. So in this case, 3,680 divided by 8,360 is just over 44%. We take our actual expenses, which was the 1,750, multiply it by the 44.02%. Our deduction is $770.30. So let's compare that $770.30 that we could deduct versus the $21.34.40 that we could deduct. It's a no-brainer. So you can see how in most scenarios, the standard rate is really going to work out better for you, especially over the long haul. You may have an expensive repair or something that pops up one year, but over the long haul, you are going to be better off with the standard rate method, again, about 85% of the time. The exceptions are going to be if you're driving a super expensive vehicle. So if you're driving a super expensive vehicle, then the depreciation can weigh that towards the actual expense method. But generally speaking, for most of us who are in this space, the standard rate method is going to be better. And again, let us stress, you need to keep track of those miles. Anything you want to add, Hako?
I just want to add a question from Carla. Or first, I'll break things down in my language, and then I'll add a question from Carla. So breaking things down in my language, I would say that, so right now we're talking about car expenses, right? Before we talked about other expenses. So what we're saying is that when it comes to the expenses of operating your car, so like the main things like car insurance, car payments, depreciation, gas, oil, all that, for that you have a choice, right? If you're doing the standard mileage rate, you cannot write off any of those things, right? Those are all within the standard mileage rate. You can definitely still write off all the other things that we talked about at the beginning of the webinar, things that are unrelated to actually driving your car. So your phone, your health insurance, things like parking and tolls, which are sort of additional, right? So just wanted to clarify that because that can be confusing for people. And all right, and then similarly, so Carla is asking, so can I deduct auto insurance? So I already said that that's part of the standard mileage rate. So if you're doing standard mileage rate, you don't get to do auto insurance separately. But what about, Carla's also saying car wash and detailing? Is that considered a part of the standard mileage rate in your view, Knox, or is that a separate deduction?
Yeah, that's absolutely part of the standard mileage rate.
Okay. I've sometimes thought of it because Uber drivers and Lyft drivers, for example, they need to care about how their car looks. They might wash it more than the government would expect them to wash it under the standard mileage rate. So that's why I've sometimes seen some advice out there saying that that's outside of the standard rate.
Yeah, I don't think that will win in tax court.
Mm-hmm.
There are some comparable cases. I'm pretty sure we would lose on that.
Okay. I'll defer to you on that one.
Yeah, I want to answer Adam's question because it's semi-related to this. And I know we're spending a lot of time on the vehicle, but most of the questions are coming on the vehicle. So I think it's important to spend that time because obviously this is a big deal, right? These are big deductions. So Adam's question was, I always thought you could write off a car if it's a used car that costs less than $2,400 and you use it exclusively for gigs. So let me say maybe, but probably not. And let me kind of give you the caveats here. So first of all, again, it's going to be really hard to fit that exclusive use criteria. Let me start with that. The second thing is this deduction to be able to do that is actually $2,500, not $2,400, by the way. And it is only on vehicles that are over 6,000 pounds gross vehicle weight rating. So most of your used cars that you buy out there are not going to be over 6,000 pounds, right? Of gross vehicle weight rating. So what this means is that it is most likely not going to work for you. Now, if you are driving, an F-150 or something like that, then it may, because those generally do. Obviously, if you're driving an F-250, 350, then that may. But you just need to be aware that most vehicles are not going to qualify for that. And I still say that over the long haul, you're going to be better off claiming the 58 cents, especially if you think you're going to get 2 or 3 years out of that. So hope that helps a little bit, but kind of wanted to answer that specifically. I'll actually let you take this one, Hako, because I know you know the answer, and I need a drink of water because I'm tired. So, but there's a question here: if using mileage claim only, other than logging business-related miles, do I have to log the personal usage? So I'll let you take that, Hako, because I know you know the answer.
Yeah, I actually already answered it in the chat. So,
awesome.
So what I wrote is that you don't actually need to, right? So if you're using standard mileage, you only need your work mileage. But if you're using Everlance automatic tracking, it's actually going to track everything, right? And then you tell it that was work and that was personal. When you say that was personal, you're actually not really doing anything with that mileage. But yeah, so that basically that's that answer. And I agree with Knox that we do want to move on from the car area because there's other things to cover. We can come back to this. But maybe just one quick one from iPhone, anonymous iPhone user. He's saying any reason the actual method would be preferred. I know you mentioned, Knox, maybe if you're driving a really expensive car that costs more than 58 cents per mile to maintain, that might be a good option. Is there any other option you can think of?
That's really the main one. I mean, the only other option is if you happen to buy a car in that particular year and it blew up on you and you threw $3,000 at it trying to fix it and then ultimately abandoned the car. Where you just had incredible expenses related to repairs in that particular year, and it's kind of a one-year scenario. But those are rare. Most of us are smart enough not to throw $3,000 at a car that we're about to junk. Those are rare. But
right. Okay, cool. So this next one, I think I'll start with. So a lot of you are also asking over in the RSVP, how do I actually get my 1099 form? Is it going to come in the mail? Am I going to get it by email? Like, where is it? Some of you even asked, like, hey, will I get a W-2? So just to clarify, like, no, you will not get a W-2, right? W-2 is for employees. You are an independent contractor. So 1099 is the right form to look for. And basically, the way this works with TaskRabbit is that if you had over $200 transactions, and you earned over $20,000 for the year, then you'll receive a 1099, and it's actually a specific one called a 1099K. And there's a little quirk this year because TaskRabbit, they actually changed who they're using for their payment processing to actually get the payments over to you from one company called Braintree to another one called Stripe. So they're actually, if you work the entire year and you hit that $20,000 twice, like you hit $40,000, you're actually going to get two separate forms, one from Braintree and one from Stripe. You might only get one or the other, depending on your situation. So that's basically the high level there. And I also want to point out that 20,000 is your gross. TaskRabbit takes a percentage of what the customers pay. I forget what the exact percentage is, but say, TaskRabbit takes 30% and you keep 70%. So that form, it might show that you made $24,000 when in reality you only made 18,000, right? Because TaskRabbit kept 6,000, right? So when you do your taxes, you're gonna take those fees from TaskRabbit, those 6,000, and those are gonna be a deduction as well. Those are gonna be your TaskRabbit fees. Knox, how is that sounding the way I'm explaining it?
Yeah, that's exactly right. And somebody actually asked early on a question about, hey, I think my 1099 is wrong. It's showing, 19 grand more. How do I get it corrected? The short answer is it wasn't wrong. They are required to report gross to the IRS. And so they have to report the gross amount, and then you're going to claim as a deduction the expenses. So you'll want to log in. Hopefully you've been tracking that along the way, but you'll want to log into your TaskRabbit account and pull that detail and be able to show that. The other thing I just want to highlight, and we'll sort of talk about this as we move into the next one, is, hey, even if I don't get the 1099, I still need to file. And by the way, this slide says 600, but you could actually be under 20,000 and not get the 1099 in this scenario, or you may get one from Braintree or one from Stripe and not from the other. You are required to report your entire income, whether it comes out on a 1099 or not. So be aware of that. You need to include your entire income in your gross income on the Schedule C. And Lester's saying the Braintree one did not report gross. They should have. You still have a requirement to report gross regardless of what is reported on the 1099K. So you have a requirement to report gross. In fact, the very first question on the Schedule C is, what is your gross income? And so you have a requirement to report that and then reduce out the other. So anyway, that's the short answer there. My opinion is that Stripe is doing that correctly. And it certainly is easier for you if they're providing you what you actually have to report. But in either scenario, from an IRS perspective, you have to report the gross amount. And whether it is reported to you or not is irrelevant. You still have a requirement to report that gross amount.
Okay, so if what Lester is saying is true, and Braintree is only giving you your net, right? So again, with the example, you have someone that they received into their bank account $18,000, but TaskRabbit took $6,000 in fees. So in the Lester example, you'd only be seeing 18,000 on your form. You would actually want to look in like on your Tasker dashboard to see what were those Tasker fees. Oh, they were 6,000. Okay, so total gross, I made 24,000, and then below as a deduction, I'm gonna put down 6,000 as TaskRabbit fees, which gets me down to my 18,000 net. So yeah, I just wanted to break that down. And then to Emmanuel's question, he's saying, can I deduct the percentage that TaskRabbit takes since they're helping with marketing? Yeah, so that's just what we're talking about. So whatever those TaskRabbit fees are, those include marketing, operations, everything that TaskRabbit is doing for you, technology.
those are all included, and that'll be your TaskRabbit deduction right there.
And someone is asking, what do you mean when you say gross? So gross is the total amount that is charged for the job. So if a particular task is charging $100 to the end client, then that is the gross amount. So, that's the amount that's reported. TaskRabbit is going to, I don't know what the percentage is, but they're going to take a fee out of that. Obviously, I would probably call that a marketing fee in terms of where to place it on the return. You can also itemize it out as a TaskRabbit fee. Either way would be fine. Just make sure you keep backup in terms of those statements in your tax file. So if you did not get the 1099 and because you didn't make the 20 grand, then you're going to need to, I assume you can log into your TaskRabbit account and see a detail of transactions. Do you know that answer, Hako?
Yeah, actually, I haven't done any tasking myself, so I haven't seen the dashboard. So it's possible that I would think that you can. You may need to add it yourself.
Okay, so Michael is saying here that you can. So is Alexis. So yeah,
Great.
You download the transaction report or the transaction sheet. That's where it's going to show you exactly where that is. So that is fantastic.
Awesome. Yeah. Thanks for everyone for under profile. Great. So thank you everyone for making this collaborative and helping us out.
Yeah.
Very cool. Very cool. So basically at this point, you should already have received that email from either Braintree or Stripe or both with your 1099. If you didn't, then reach out to us. We can help, or reach out to Tasker support. Yeah, cool. So what's next?
Cool. So, what if I have 1099s from multiple jobs? Do I file them together? The short answer is yes. So even if I got a Braintree and a Stripe, right, those are both going to go on the same Schedule C. Now, let me give the caveat if you're doing multiple types of things. Like someone earlier asked, what if I'm doing Uber or Lyft in addition, or that sort of thing? That is actually going to go on a separate Schedule C because that's going to be a different SIC code or a different business code in that scenario. So, but yes, it's all going to be on the same return. It's just that you might have multiple Schedule Cs. But if it's within the same business, for example, if it's all related to tasking, it's going to go on the same Schedule C. So I got one from Braintree, I got one from Stripe. That's going on the same Schedule C.
And now, just to clarify, so maybe I'm doing independent, like tasking type work. Maybe I'm doing it, maybe I'm a painter, or I hang up, new TVs. I install those. Maybe I'm doing it for one of TaskRabbit's competitors, or I'm also doing it just personally by advertising on Craigslist on the side. Those would all go under the same Schedule C because those are all the same type of business, correct?
Correct.
Cool.
Yep. That's exactly right. And then obviously if you have a W-2 and a 1099, so some of us do this stuff as a side gig, right? We're not going to file separate tax returns. We're going to file a single 1040. 1040 is just the individual income tax return. So it's going to be on the same tax return. And I think we beat to death now. What do you do about getting the 1099? So
yeah. If you don't know, you haven't been listening, but it's right. Yeah. We're going to send a recording of this so you'll be able to watch it again. Cool. Okay. So the next one is, how much will I need to pay in taxes, and will I get a refund? I also want to shout out to some people in the RSVP form that asked, like what percentage should I set aside for taxes, that sort of thing. So we're going to cover this a little bit, and then I'm also going to talk about a cool product that Everlance has that can help you with this.
Yeah. So, most of us, if we have a W-2 job and we don't have any sort of side gig or anything, we get a refund, right? That's true for most of us. So if you have mostly W-2, just a little bit of TaskRabbit, you're probably going to get a refund. If you have a W-2 job and you're doing TaskRabbit as a side gig, it could go either way. I mean, some of that depends on what's your breakdown, what's your percentage, right? How much are you actually making from TaskRabbit versus how much are you actually making from your job? So that could sort of go either way. If you're only doing TaskRabbit, you are most likely going to owe. And that is because nothing was held back along the way. The exception to that would be if you have kids and sort of fell into the earned income tax credit, you get some child tax credits too, then you could be in a scenario where you still get a refund because of those credits. But for most people, you're going to end up owing if you're only in the gig economy. Part of the reason for that is that whatever your net income is, so the way we get to our net income is, as we said earlier, is you take that gross income, then you subtract out all of your deductions, and then your net is the amount that's left, right? So this is kind of like your real profit. So that amount is the only amount that you're actually taxed on. So going back to our example earlier, I made $100. I had $58 in deductions related to my car, and I had another $30 in deductions from TaskRabbit, right? So now I'm at a situation where 58 plus 30 is 88. I only have a $12 net profit in this scenario, assuming no other deductions. So in that scenario, I'm only paying taxes on that $12 difference. So I hope that kind of helps out. In terms of what taxes you're going to pay self-employment tax. Self-employment tax alone is 15.3%. So you're going to pay 15.3% in self-employment tax, and you're also going to pay income tax. So income tax is going to be at whatever percentage tax bracket you're in. Starts at 10% and sort of goes up from there. So it could be as low as 25.3% that you're paying, or it could be as high as a whole lot more, up north of 50% actually. So by the time you combine the two. So I recommend that you set aside at least 25%. And with that, I'll turn it over to Hako, who's going to show you about this cool new product that can help you to do that.
Awesome. Yeah. So yeah, we'll get to this slide in a second about saving money. But quickly, in terms of actually putting aside money for your taxes really easily, I'm going to show you that right here. So, and this is actually a brand new product that we just launched. So what I'm going to show you is like straight from screenshots on my computer, because like it's still in beta. We have a few hundred users that are using this, and if you'd like to use it, send us an email. We'll hook you up. So yeah, here we go. So you guys should be able to see my screen here. Knox, can you see the screenshot?
Yes, I can.
Cool. So this is something we're calling tax vault. So it allows you to automatically set aside money for your tax bill. So you're totally in control. You put money into the separate account automatically. If you want to take it out, you totally can. It's FDIC insured, all that. And yeah, so basically the way it works is that each time you get paid, say you get paid $100, it puts automatically some percentage. In this case, it's $25, 25% into your tax vault, and then it puts the rest into your normal checking account, and you can control what that amount is. Getting started is really easy. You don't need Social Security, anything like that. It's just your name, last name, and phone number. That's pretty cool. Then you connect your existing bank account, and once you do that, then we connect with that account, and then we can start to say, cool, in this case, you're all cut up, or like, hey, we have a scheduled autosave for you where like we see you got paid $200, so we're going to move aside whatever the right amount is. So this is a product that we're really excited about, and right now it's only out there for iPhone. So if you have an iPhone, download the Everlance app, go over to the bottom right where it says tax vault, and you'll be able to join the wait list there, and hopefully that will be great for you. And if you have any feedback just based on this, we're still really looking for feedback on this new product. So I'll share my email right here, hako@everlance.com, and I would love to know what you think, or just let us know right now in the chat. Cool. All right, and yeah, I guess back to the slides.
Yeah, so obviously we want to record our miles because I think we've driven the point home that this is a huge deduction for us, right?
Yeah.
This is an important one. So you just absolutely want to record these miles. So let's talk a little bit about what miles count, because I think this confuses a lot of people. What can I deduct and what can I not deduct mileage-wise? Well, first of all, when you're driving to and from a job, that's deductible. So that means it's deductible when you're driving to the client's site. It's deductible when you're driving to the store to pick up supplies. It's deductible when I'm going from one job to the next. All of those things are deductible. So we're going to put those in the business mileage category. Because your office is in your home, meaning you don't have a separate office, you also could claim from your home to your first job and from your last job to your home. So it's not considered commuter mileage since your office is in your home. And by the way, office and home is another potential big deduction for you. I didn't mention it earlier. But if you have a separate area that is set aside exclusively used for your business, where you're storing your tools, for example, where maybe you have your computer set up that is only used for business, maybe it's a bedroom in your home, maybe it's a part of your garage, but if you have a separate space in your home that is exclusively used for business, then you can take an office and home deduction, and if it's 300 square feet or less, then you actually get to take that square footage, multiply it by $5 per square foot, and that's another deduction. So that's another one that you can pick up on, and it's pretty simple to grab. But again, it has to be exclusive use. That's sort of the caveat. So it can't be, here's my computer that I also let my kids do their homework on. It has to be a space that is exclusively used for your business. And then, of course, taking care of your car. So when you are going to the gas station, when you're going to get your oil change done, when you're going to get those car washes, all of those kinds of things, those two can be considered related to your business because you have to do those things related to your business. So we're going to be able to deduct those miles as well. So lots of miles you can deduct. And I think a lot of people, Hako, miss some of these miles. I want to take another question that Danielle asked, and it's a great, great question. She said, hey, how does it work if I have two different types of work? So I'm doing Uber, I'm doing Lyft, but I'm also doing tasking. Or whatever the case, the two different jobs may be. How do I not double deduct my car? How do I keep track of that? So the short answer is that you then have to assign the business purpose for your mileage. So for example, I'm going to say tasking. And you can set this up in Everlance where you can say, hey, I'm doing tasking, I'm doing this, I'm doing that. Are you going to show that, Haka? It looks like you just took back the screen share.
Yeah.
Awesome. Just show it.
All right. Cool. So yeah, exactly like Knox is saying, in Everlance here you have your trips. In this case, I don't have any trips because I've already classified them all, but I do have my transactions. So anyways, you can connect your bank account and see a list of all your transactions here and say, oh yeah, so this trip, let's just imagine this was a trip. I can swipe it to the right to say it was work. And when I do that, it's going to ask me what type of work, right? So I've already set up that these are my different income sources. I do tasking, I do Ubering, I do real estate. So I would simply say that was for TaskRabbit. And then I would say, okay, this one here was for Uber. And that's it, right? So at the end of the year, when you go and you simply, I'll show you how easy it is to do a report. So you go to home, click create report, and you select, I want to do it for the year 2020. That's it. Email it to myself. You're going to be able to see it broken down by your total tasking mileage, your total DoorDash mileage, your total Uber mileage, whatever it is. And you're going to take each one of those totals and put them into the correct Schedule C. So all your tasking related ones, so tasking plus like other construction jobs, all into one thing. If you do rideshare, Uber, and Lyft, you put all those together into one. And basically that's how it works.
Yeah, so Danielle, to answer your question, the same car is going to show up in multiple Schedule Cs in that scenario, but the business mileage that you report on the particular Schedule C will be only the business mileage related to that Schedule C. And so that's the way that you do that. So I hope that helped. That was a great question, by the way. We've now done several of these webinars, and you guys were the first one to ask that, and I think that's a fantastic question. So thanks for asking that. Yeah, awesome. Okay, so you were kind of showing Everlance a little bit there.
Yeah, I think in the interest of time, we'll skip over this. We've talked a bit. Cool. Now we want to tell you about, we promised we would give you some cool discounts for filing your taxes. So hopefully after this, you feel more prepared. By the way, if you want to rewatch it, some people asked, we're going to set a recording. So if you need to leave for a task right now, you can do that. But anyways, if you're ready to file your taxes and you want to do them online, we actually offer a completely free version in partnership with Credit Karma Tax. So we're kind of joking here, TurboTax, they like to say they're free. This thing is actually free. TurboTax is great too. I've used it in the past. But if you would like to do them yourself, this is a great option. And you simply go to, I'll share the link. It's bit.ly/everckfree. And if you want to do them with a tax professional, that can also be a great idea, especially if you're sort of new to the gig economy, you're new to being self-employed. You probably have a lot more questions that we were not able to answer, just in this sort of high-level chat and Q&A. So it could be a great idea, and Knox is going to tell you a great way to do that in an affordable and virtual way from your home.
Yeah, so we'll talk some about that in a minute. But obviously, Credit Karma is a fantastic deal if you want to use your own tax software. Free is really hard to beat. I'm cheap, so I like free. But if you want to use a professional, we would love to help you. But even if you don't want to use us, we have an email list where we send out information about the gig economy and specifically taxes related to it. And so you can go to this website, subscribe to get those updates, and we will send those out to you. As a subscriber of this list, you also will get information on how to use our firm to actually do the taxes for you. We've done a special deal where you can do this for $250, which is really, really inexpensive for someone with a self-employed business. And we made it even sweeter than that. If you use Everlance, we'll take another $50 off. And even if you have not historically used Everlance, but you agree to start using Everlance, we will take another $50 off. So $250 if you don't use Everlance, $200 if you have used Everlance or agree to use Everlance going forward. Fantastic deal. And you can go to Gig Economy Taxes and sign up for that. And other than that, what are some next steps?
Yeah, so for some next steps, you're going to be receiving a text and an email in the next day with the recording, with the slides, with all the discount offers. So please look out for that. I'm going to share right now a link where you can review this webinar. This is really helpful to help us do better. It's like 2 questions, so it takes literally 30 seconds. If you could do that right now, as we wrap up, that would be really awesome. And the final thing we're going to do is we're also going to answer rapid fire any questions that we haven't gotten to. So if you have any remaining questions, please throw those on here into the chat, and we'll get to those. We're also going to get to some questions from the form that you guys filled out at the beginning. Please click on that link to review right now really quickly, and also stick around and ask any final questions. We're going to get to those in a really fun, quick method. Yeah. Also, if you want to get Everlance, just go over to everlance.com/TaskRabbit, and that's where you can get the 3 months free. We have a special deal for taskers, so you can do that. Cool. Let's see what's next. And there's also at the bottom of that page, there's some really helpful resources, some nice little quizzes and tools that you can use to review some of the topics that we talked about today at your own leisure. So just go to everlance.com/TaskRabbit, go to the bottom, you'll find that there. Cool. And now, let's get to the last of the questions here. Cool. So I see some questions about the business mileage. Sorry, not the business mileage. The home office deduction, right? So someone is saying, is it $5 per month, or $5 per square foot per month, or $5 per square foot total?
Yeah, so that's going to be annual. So the deduction is the simplified method is capped at $1,500 a year, but that you can do a different method where you actually take your total expenses for the home and divide it by the percentage of business use. So this particularly works well if you have more than 300 square feet. So say, for example, I have 1,000 square feet dedicated to my business. I have 3,000 total square feet in my home, and that's going to be a third of all of my home expenses I get to deduct. A little more complex, and you have to keep all the receipts to do it that way. If you don't have all of the receipts and you want the simplified method, it's simply $5 per up to 300 square feet, which is $1,500 a year. So that's the short version of how that works. I'm going to take Michael's question because you work for Everlance and you are too modest. So I'm going to take it. Michael is asking, hey, I use MileIQ right now, which is simply a competitor out there for mileage. MileIQ does a great job. I've used it myself at times, but Everlance has a pretty big advantage, and that is that Everlance will also, in addition to doing all of the things that MileIQ does, will help you keep track of your receipts. So this is a big, big advantage. So whenever you have a toll, whenever you have parking, whenever you have supplies that you went, and as taskers, you're going to have those supplies, right? You bought your tools, all of those receipts, Everlance is going to help you to keep track of all of that as well. Plus with Everlance, you can actually attach your business bank account to Everlance, and you can actually classify transactions. Plus, they're going to provide for you the ability to set aside a percentage of your income as you go, so that you don't get in trouble along the way. So Everlance, bottom line, is more feature rich. So that's kind of the answer there. Comparison on that, I think Everlance is $8 a month. Do I have that right, Hako?
Yeah, so it's $8 a month for our normal plan, and now we introduced a premium plus plan. So if you're a really serious worker who wants all the bells and whistles, we have a slightly more expensive plan too. But what's cool is that we actually have a free version as well. So maybe you're mostly a W-2, an employee, and you only do a little bit of tasking on the side. The free version might be great for you. You can actually use that for your whole life. You know, that's totally fine. It just limits you to only 30 automatic trips a month. So once you go over 30 automatic trips per month, you have to manually add them. So yeah, you do have a free version, but if you're a more serious tasker, you can subscribe and pay $8 a month. That is totally tax deductible, and we think that it's going to save you way more than a total of $60 or $96 in terms of all the mileage that you're gonna deduct at the end of the year. Cool. And seeing a couple good questions from Zam. So we'll start with the easier one first, which is, can you file jointly with your spouse if the spouse is an employee?
Yes, and you most likely should.
Awesome. And then the other question that we're definitely going to add to the webinar next year, which is a great question, is should we file taxes quarterly? So my high level understanding of who needs to file their taxes quarterly is that if you would owe more than $1,000 at the end of the year, then you should have been filing quarterly. There's a couple more things, but as a high level, is that a good way to think about it, Knox?
Yeah, but let me back up slightly. It's not that we're filing quarterly. We're still filing once a year, but we're making estimated payments quarterly. So you don't have to fill out forms and all that. You simply are making, it's basically a deposit. You're making an estimated payment in. You're saying, hey, IRS, I made some money and I didn't have any withholdings on that. And so I am required by law to give you some money. And so you simply send in what's called an estimated tax payment, and the IRS simply holds it there for you for when your taxes come. Now, you're required by law to do that if, as Hako said, you're going to owe more than $1,000 at the end of the year. So you are required by law, if you are not a W-2 employee and you're going to owe more than $1,000, to go ahead and do that. Even if you are a W-2 employee, but you also have the side gig and you're going to owe more than $1,000, you are required to do that. So somebody else asked, I think, what if I didn't do that? Oops, not the end of the world. You'll just have a slight penalty. And, you know, it's not the end of the world. So
right, I think the penalty is like 6% or something like that right now. So it's not crazy. But yeah, it's a little extra money you're going to have to pay.
Yep.
Cool. So I want to get to the question from Motto X4 across 4, because I saw this question in the pre-form as well. So he's someone, or he or she, I'm not sure, is someone that is going traveling in a lot of different states for their work. I think either them or someone else lives in an RV and they're just going in a lot of different places to work tasking and other jobs. Which states do they do their taxes in? How does that work?
Yeah, so you're not going to like my answer, Moto. He has a Motorola X4 phone, I think is what that means, by the way, Hako. Mm-hmm. So, but yeah, you're going to need to file in each state in which you worked most likely. And nexus issues, that's what we call these issues, nexus issues. They get complex. It depends on the number of days and the percentage of time that you were in each state. So now you not only need to keep a mileage log, but you also need to keep a log of where you were each day. So start doing that. And at least the first year you're dealing with it, and maybe always, you're going to want a tax professional.
Mm-hmm. Makes sense. Cool. We have a question from Anthony about, if I'm working in food delivery, so it's a little bit different from tasking, but we know that a lot of you do multiple jobs. We want to answer it. If you're driving from your house to your first delivery, is that deductible? So it totally is. We covered this before. And it's also very much applies to taskers. So, maybe you live, like in this example, you live in Sacramento, it's a smaller city and you want to come to San Francisco because that's where the really lucrative or, the lucrative tasks are. That entire drive from Sacramento to San Francisco is tax deductible, is something you should be tracking and deducting. So yeah, that's really great there. Yeah, let's see. Any others that we have missed here? Someone asked in the form, do I claim expenses that a client reimburses me for? Knox, I'll let you take that one.
No, you do not.
Right, so you already got reimbursed, so it's not, you're at zero, right? So you don't claim that. Cool. Someone said, and actually I don't quite understand this, so clarify if it's you. If not, then maybe Knox, you understand it. Do I need to include takeout on my taxes if I made under 20K? So I don't know what they mean by takeout.
I'm not I think they mean tasking. I'm not sure, but the short answer
okay.
is, what I think
they're
asking is, if I made under 20K, do I have to report my income? And the short answer is yes, you do. So if I didn't understand your question, then clarify that a little bit, and we'll try to answer it.
Another great question here is, so I have an LLC with an EIN. What tax form do I fill out?
Great question. So if you are a single member LLC, meaning that it's just you as the only member of the LLC, you're just still going to file a Schedule C. It's called a disregarded entity. You're still going to file the Schedule C, and everything I said still applies. If you have partners, so there are multiple ones of you that are members of the LLC, then you're going to file a partnership income tax return, which is a 1065, and that 1065 partnership tax return will issue a K1, which means that you're going to file a Schedule E. I doubt that's what you're talking about. Most of you would be single member LLCs, if at all. If you're in that other category where you need a partnership return, you probably need a tax professional.
Cool. So this next question here, yeah, hopefully not many of you are in this boat where someone was asking, so I haven't filed in years. How do I get a summary of all that I might owe? Knox?
Yeah, fun stuff. So you need a tax professional is the short answer. And I am actually going to put my direct email out here. And this is specific to you, and I don't know who you are. So if you ask that question, you're allowed to use this email. But email me, and I can kind of help you with that. But the short answer is, I have a method of getting power of attorney and finding out exactly what the IRS has on file for you and what each state has on file for you. And we would start there and then also reconstruct from your bank accounts.
Cool. Let's see, any others that you're seeing, Knox?
Somebody asked about the app. Is it always recording mileage, or do you need to open it before leaving for a job? So I'll let you take that, Hako.
Yeah, so the great thing about Everlance is that it's meant to be totally automatic, so you don't need to be opening it each time, right? So it's always recording if you set it to automatic, which most people do. So you don't need to do anything. You just go around your business. Maybe once a day, at the end of the day, you can open it up and just swipe. So yeah, that was my work trip, Maybe some people do it once a week. It's good to get into a regular rhythm. If you don't like automatic tracking, you can manually start it. But the short answer is that the best way is to really do it automatically. And
so apparently there's a few people on here who haven't filed in years.
Yeah.
You can email me if you're in that scenario. It's knox@knoxtaxprep.com. And yeah, we should get you straight.
Cool. Yeah, I see another question on what percentage should I expect to pay for taxes? So, we covered that a little bit before. Knox was talking about how there's a self-employment tax, which that just by itself is 15% or around that, plus income tax. So what we recommend at Everlance as a rule of thumb is to put aside 20 to 30% of your income for taxes, and that should cover you pretty well. Let's see. Any others that you're seeing, Knox?
Yeah, our classic question of, I didn't track mileage. What do I do? I'll let you take it, Hako, because we've done enough
Totally.
of these to know the answer.
Yeah, so the IRS approved answer is that you need to be tracking your mileage every day as you go. You can't recreate a log after the fact. So the good news is that a lot of the gig economy apps that you might be working for do track this for you. So if you work for Uber and Lyft, they actually track your mileage while you're online for you. I'm actually not sure if TaskRabbit does that. I think they may not. So that's okay. I mean, now you know, and going forward, you can start tracking your mileage and you'll be able to save significantly on those. I also want to point out that even in the case where Uber and Lyft or DoorDash is tracking your mileage, they're not tracking all your mileage, right? Because as we talked about before, you can deduct a lot more mileage than just while you're actually driving, for your job. Like while you're going to a new site or while you're dropping off a passenger, you can deduct while you're taking care of your car. So you're going to the car maintenance, going to car wash, all those things you can deduct when you're going from home to a hot zone. So really what you need to start doing is to start tracking your mileage going forward, and you'll be straight from there.
Yeah, so to answer Anthony's question, he says, I don't think TaskRabbit does, but I could estimate from my house to the task. And the short answer is yes, you could. We would disclose that. And in your scenario, Anthony, I think you were one of the ones that needed multiple years. So we would disclose that. And we would also in that disclosure say, this is a taxpayer who is trying to become compliant. We're doing the best we can on these returns. And he is now using a professional app to do this going forward. So we would 100% disclose that. And I have incredible success rate with getting that through.
That's awesome. That's awesome. Cool. Yeah. Question from Galaxy A6. I now know that's a phone, so thanks for reminding me. Knox, so those can be phones. Not sure if you got my question regarding our tips. So I think this person was asking, are tips deductible? There's not. So my thinking is they're not an expense. So you should claim them as income, right? But not as a deduction. What do you think, Knox?
Yes. Typically, if it's a tip paid to you, then it is income. If it's a tip that you paid to somebody else, it could be a deduction. So I'm not sure which way you're talking about that, but if it's a tip that you received, it counts as additional income. So it'd be included in your gross income.
Awesome. And the second part of that person's question was, can Everlance only be used for tasking related jobs? So absolutely not. It can be used for any job you want. So any sort of self-employed income, maybe you're a writer, photographer, this person here is also doing inspections, real estate, all of that, you can add them all as separate income sources. That way your mileage and all your transactions are super well organized and you'll be covered in case of an audit. So yeah, most of our users actually have multiple income sources. We know that's really common these days in the gig economy. So that's great. And yeah, this has gone a lot of really great questions. So this is actually, I think, the longest webinar we've had so far this year. So yeah, I think we're probably gonna wind down, maybe one or two last questions. Perry, the Everlance app is absolutely available on Android. It's just a tax vault that, because it's a new feature, we're starting out with iPhone. Zam, can you earn a certain amount before paying any sort of taxes? So Knox, you taught me this at the last webinar. So if you make less than $400, then Knox, correct me if I'm wrong, you don't need to pay any taxes on that if your total income is less than $400. But if you make $20,000, working at McDonald's, and then you made $200 as a tasker, you do need to still pay taxes on that $200 from TaskRabbit. Knox, is that right?
You're close.
All right. Make
so
sure
it's actually $400 in self-employment income. So if you have $400 or more than $400 in self-employment income, it actually starts at $401. Then you have a filing requirement and you are subject to self-employment tax, which is that 15.3%. So you are going to have to file and you're going to be subject to taxes even at $401. Now, obviously $401, if that's your only income, not a whole lot of tax there. But nonetheless, that is the reality of it. And yes, that's $400 for the entire year. So I don't think there's probably anybody on this webinar who's going to be in the category of not having to file.
Yeah, so 99 or 99.9% of you will still need to file no matter the situation. So yeah, the IRS knows you made that money, so be sure that you do it. Cool. So yeah, maybe we'll end it here. If you have any more questions, that link that I shared earlier, bit.ly/evertask-review. In addition to reviewing us, you can leave any more questions there and we'll answer those by email. Yeah, and you can also rewatch this recording. Yeah, we love that we keep getting questions, but yeah, we do need to end this. So thanks everyone for for coming out. It's been a pleasure. Knox, thank you so much for the time and for your expertise. It's really an honor and a privilege to have you here with us. And yeah, wishing you all a lucrative year, fun year, all that. And yeah, take care.
Awesome. Thank y'all. Have a great day.